Hello and welcome to the Books Crypto Club Zoom catch-up over coffee, tea or whatever drink you want right now in the COVID lockdown environment. 17th January. This is the first meeting we've had for a little while where we're just going to chat about various things about the crypto market, about Bitcoin, Ethereum, Cardano and Tether in particular. So I hope you enjoy this. Tune in for any other events that we have. Do click on the subscribe, click on the like button, as all the YouTubers say, and hope you enjoy this.
Hi, good afternoon, everyone. Hi, Gary.
Hey, Chris, good to join us.
Yes, hello. I'll switch my camera on in a minute. I'm just in the kitchen and I don't have the best Wi-Fi signal, so I'll switch it on in a minute.
So has everyone been watching the crazy prices of Bitcoin lately?
It's like 2017 all over again.
Yep.
Which actually I take as a good sign.
I think you're right. It kind of feels like we've been here before.
Mm.
I was just a little bit surprised as to how well the prices kept up for a little while, actually. I was expecting, like in 2017, you might remember it was just a few days before Christmas where the prices collapsed.
Yeah.
I was actually quite impressed the way it carried on going up for a little while.
Yeah, and I think it's interesting, even in the media, even like the press, the national press seem to be back to covering Bitcoin more, and there's some of those sort of scaremongering articles, but
yeah, well, it's interesting. I had a last-minute call from Sky News yesterday.
Did you?
Oh, sorry, on Friday afternoon, in fact. They wanted me to give them a quote about Bitcoin, and that they'd been interviewing the guy who'd been to the whose hard drive had gone to the rubbish tip.
Is that the one in Cardiff or Stephen?
Yeah, I think it was the Cardiff one. So they interviewed him, and they wanted some other people to offer some comments about the crypto market and what's going on.
Right.
And so I threw my path worth in. But they seemed a little bit disappointed when they were saying, "Oh, right, so all these big events going on, is that what's leading to crypto price changes?" Then I said, "Oh no, it's something completely different." And you can see the producer's ears kind of going doing, "Oh right, what is it there?" I said, "There's a butterfly in the Amazon that's flapping its wings, and it's all completely random. And anyone who claims otherwise hasn't been in the crypto space long enough." And he went, "Oh, that's interesting. Thank you." So
yeah, I know. I do watch a lot of YouTube videos, and the ones that I just don't pay any attention to nowadays are the technical analysis ones.
Yep.
All the ones making this is why the price is going up. This is where it's going to be at the end of such and such and so on. I just think you've got a 50-50 chance of being right.
Well, I always say with crypto, because I get people saying to me all the time, "Oh, you've been in the space for a while. What's going to happen with Bitcoin or Ethereum or whatever?" I say, "Look, all I can guarantee is one of three things. It's definitely going to go up, or it's going to definitely go down, or they're going to definitely say the same. It's one of those three things, without a doubt."
And on the same day.
Well, probably at the same time as well. Yeah, so it's good to see we've got a few new faces here. Nikita, you're a particular exception because up till now, this group was for people in the Buckinghamshire area. Hence, it's called Books Crypto Club because of Buckinghamshire, not because we want to make loads of books. But you're less local, aren't you?
Yes. So I'm Canadian, living in Belfast. And very much interested in cryptocurrencies, and there's no sort of community. There is sort of a blockchain club, but it's not what I was looking for. Okay. I'm looking for people who are sort of a little bit further on their journey when it comes to cryptocurrencies and blockchain to sort of learn from. So yeah, and happy for you guys to come over to Belfast anytime for drinks. It's a great city.
So I did a presentation in the Titanic conference facility.
Very good, yeah.
which was about blockchain and crypto in the insurance industry a while ago. I can probably put you in touch with some useful people in Belfast who are in the crypto and blockchain space, who a few of them joined PwC for a while, and then I think they've left again, they've set up their own stuff. So there is a community there, it's just a little bit harder to find. So yeah, I'll ping you a note separately on that. That's great. Well, welcome to the group, Nikita. Leslie, another new face, I think.
Hi
Come
there.
and say hi.
I think I joined the WhatsApp group just before the first lockdown, so I never got to join you in your coffee meetups at in Starbucks, wasn't it? Starbucks in Marlow.
That's
I
right,
never
yeah.
quite made it along there, but yeah. So I'm in Reading, so not strictly speaking in Buckinghamshire, but managed to get into the group somehow. Yeah,
there is actually a whole community around the Reading area, so that's okay.
Yeah,
Yes,
I know.
so I'm Twyford, Leslie.
Oh, are you? Oh, okay. So I don't feel quite so bad not to be in Buckinghamshire then.
I think it counts as a suburb of Buckinghamshire, Reading, anyway. So
Yeah, cheeky
maybe we should call ourselves Bucks, Berks, and Belfast. The
three Bs.
Yeah, exactly.
And Wales.
Oh,
Don't forget Wales.
Really? Wales, are you?
There you go.
Yeah, Georgina, you're going to have to move to Betsy Coed or something to make it the letter B's still, or Bilf Wells, perhaps.
Yeah. There's nothing nearby that is B, but I'll try my best.
Yeah. Well, nice to see you out in still surviving out in Wales. Anyway, that's cool. It's good to see you again. I've got another face here. Chris, come say hi.
Yes, hi everyone. Well, with me, it's a bit of a funny story. I started with Bitcoin in, I think, late 2017. I never followed it. I'm in Windsor. And I bought a bit of Bitcoin. I understood the concept as a decentralized monetization system. But then, to be honest, I completely forgot about it. And I've recently got into it again. And yeah, I mean, so far, I would consider myself a newbie. As you've seen, I've got a lot of probably beginner questions. I had some issues wrapping my head around Ethereum, what it is, etc. So I'm trying to understand it more. And well, I'm coming a bit from a share trading side of view. So cryptocurrency is still a bit new to me.
Okay.
And I'm trying to figure out if I want to invest in cryptocurrency, which cryptocurrency actually makes sense. And I think it means a lot of reading white papers as well, just to figure out if it's really a viable project or not. So yeah, that's a brief introduction. So I'm new to cryptocurrency, and I hope to learn a lot from you guys.
That's cool. Well, thanks for joining us, Chris. And what you'll find is everyone is at different levels. I've been in this space for about 5-6 years, and I'm still learning stuff. And it's funny that the more I learn, the more I realise how unimportant it is to know this stuff, which is kind of bizarre. So you're right. You can go off and read white papers and that. I went through the craze where you'd be reading loads of white papers, all sorts of projects, but you never actually knew if the team was any good, the project was any good, or any of this. Mm-hmm. And sometimes, you put some money into something because the white paper was fantastic project, fantastic idea, wrong time, and it would collapse. And then you'd get others where it was a group of people who didn't have a clue what they were doing, wasn't a particularly good idea, but the crypto still went up in price. So it's kind of bizarre on that. So maybe we can discuss some other things on that. That'd be good. Excellent. Well, welcome on, Chris. And then we've got Maz as well, another new face.
Hi, everyone. My name is Maz. I live in Essex, so not very far from yourselves. I've been involved in cryptocurrency from about 2014. Got involved in Bitcoin, started a little mining operation from home with Bitcoin, and then moved on to Ethereum. So my main focus has been on the mining side, but I see this space growing. It's going to get bigger and bigger over the next few years. And more people want to know about this cryptocurrency. And at the moment, it's still not easy to buy and sell cryptocurrency for like a normal person. It's very complicated. You've got to go through the financial information, get your ID verified. And at the end of the day, you are the bank for cryptocurrency. You're holding that information or that asset yourself. And if you lose that asset, that's it. You've lost everything. Yep. And people don't understand that. So, and now I wanted to join this group with people like yourselves to get a better understanding on what can be done better going forward for the cryptocurrency space, really.
Excellent. That's good. Okay. Well, for those of you who are on the WhatsApp group, which I think is everybody, I pinged out a quick note before to say the kind of things that we could cover off today. But I'm happy to go with the flow on this. So certainly the things I'd seen that were mentioned on the WhatsApp group in particular was people were interested in learning a bit more about stable coins, and then particularly about Tether and USDT. And I think someone mentioned about privacy coins as well. So I was going to throw that in as kind of a headline, kind of a agenda list of going through. So we've already kind of covered the welcome type thing. I don't know how much everyone knows about stable coins, and is it worth my while actually talking about those for a few minutes? What's everyone's thinking?
Yeah, I'd be interested to just the background to why they even exist. Because from an investment point of view, there seems no point to them.
Okay.
Because they're going to stay stable, hence the name, I guess.
So this is always the funny thing. I keep, in all my career in technology and that, I always ask people to take a step back, and when they use any terms or words, they really should explain what they mean by them. So when we say stable coin, the first thing is stable against what? So it's this beginning thing. So what you do have is you have crypto tokens which are stabilized against an asset in some way. So the one that's hitting the press at the moment, we might talk a bit more about later, is Tether, which is stabilized at for one Tether token. In theory, it equates to $1 US. And the reason you need the stability is it's not for investing or store of value. It's an alternate means of exchange. So at the moment, for those of you who have been into crypto for a while, you'll realize this already. For those of you who are a bit newer, you may not realize that you start off by buying something, say Bitcoin, and you go onto Coinbase or blockchain.com or whatever, and you buy some Bitcoin and you go, oh, great, now what can I do with it? And you can then go on to another exchange like Kraken or Coinbase Pro, and you can use the Bitcoin to go off and buy other things with it. Well, what you kind of need at times is a kind of almost a safe harbor, a default currency that you go back to every so often in order to keep exchanging, because it can get quite complicated. If you're used to working in US dollars, for example, it gets a bit complicated to leave it all in Bitcoin and keep working out where you're going, although that's actually the best way. So what some people do, and some big firms do this, is that they actually buy Bitcoin initially, then they use it, they buy Tether, and that means that they can work out what all their trades are in dollars, and then they buy and sell things, either more Bitcoin or other crypto, using a stable coin like Tether, where $1 is one Tether. So that's a stable coin that is backed by, in theory at least, an underlying asset. So quite often you'll get them pegged to $1 or a pound or whatever. You get other stable coins that are pegged to a basket of either currencies. So if you look at, you may have seen the news recently about Libra, which is Facebook's project, now rebranded as DM, and they're going to have a pool of fiat assets, so traditional currencies like the dollar, pound, euro, and so on, as a pool, and that acts as the stabilization mechanism against their cryptocurrency. So we've got stable coins that are stable against a single currency, like Tether against the dollar. You've got them like DM, which is stabilized against a pool of currencies, DM being an example. You've got other cryptos which are stabilized against a pool of cryptocurrencies. This is where it starts getting a bit crazy. And then finally, you have cryptocurrencies that are stabilized algorithmically in that it's got an automatic mechanism built into it to buy, sell, mine, mint, and destroy the tokens to maintain constant value and constant prices. So that's the idea of stablecoins. It's basically a conduit to allow you to trade in some way. And you think about one of the problems with Bitcoin at the moment is that it's just so volatile. You know, if you said to me, you know, if Starbucks was back open again, Gary, can you go and grab me a cup of coffee over at Starbucks? Here, I'll pay you in Bitcoin. And currently it's 0.000123 whatever for a soy latte or something. By the time I've been served and I actually pay for it, it's probably changed in price again. So that this is where you can't really use Bitcoin directly on that kind of thing because it's so volatile. Whereas with a stable coin, you could say, well, this is 2.39 tethers and it stays fixed. Does that make sense to everybody?
Mm-hmm.
For the organisations that launch a stable coin, how do they actually make money?
Yeah, I've yet to work that out. But I think it's because they can do clever things like if you put your crypto into their holdings, then they can effectively do what banks used to do with what's called bed and breakfasting, which is where they can reloan your cryptos out and as loans and an interest.
Okay.
I
Right.
think that's one of the ways that they're doing it. I don't know if anyone's got any other thoughts on how they make money out of it.
Well,
I spent
about Tether there. Oh, sorry, Georgina.
go on, you go first.
So I did a bit of research into Tether. It was a year ago or so, but it looked like people were using it mainly as a way, an exchange, you know, like Western Union, you know, to transfer money from, I don't know, Russia and places like that to China and vice versa, more or less as a modern kind of Western Union currency sort of delivery mechanism into a, you know, from one place to another. And maybe they're taking a cut, are they, like Western Union would do?
Well, I think that might be it. I've never really looked at how the companies who are generating stable coins actually make their money. But I think you're right. They're either getting a cut in some way or they're able to use the assets that are being provided in some way. Mm-hmm. Yeah, an interesting space, definitely. So I don't know if anyone's got any other thoughts about stablecoins. Otherwise, it'd be worthwhile talking about the news with Tether at the moment.
Mm. Yeah, I mean, sorry, go on.
I went onto the Tether website recently, prompted by that you know, very lengthy article about the risks of Tether. And I just went onto the one page, why use Tether? And all there is a bunch of big logos, big name logos. And I'm like, that gives me no reason at all. And if I was, you know, because of course, you know, certainly as soon as Bitcoin gains any traction in the media, so do the scam merchants come rushing out of the woodwork, and you get all sorts of Ponzi schemes and MLM marketing opportunities trying to get people into Bitcoin. But actually, there's nothing to do with crypto with it at all. And to me, it has that same kind of feel about it. There's no substance to, and for something that is so big, I would expect the page that is about why use Tether to be considerably more convincing than just having a few graphics and a couple of testimonials.
I think the link that Spencer shared earlier on was really good, actually. I actually saw that link appear in, I think, 3 different groups today. So I thought I really should read it. And you look at the principle originally behind Tether, for those who don't know, is Tether is a company in the States. And what they said originally is that for every 1 Tether that is minted, that is brought into existence, they would place $1 in a bank account. So you've got a 1-for-1 match, and that's how they maintain everything. And then it grew and grew. And then I think there was a situation where they may have bailed out one of the exchanges a few years ago, which is having some problems.
Well, yeah, they're deeply connected to a particular exchange, aren't they?
Yeah, was it Bitfinex or something?
Bitfinex, yeah, I think it's Bitfinex, yeah.
And they had some problems in some way, and magically the problems went away, and Tether seemed to be the salvation in some way. And what looks like happened is that maybe they put up some collateral in some way to keep Bitfinex going. Not sure of the details of that. Maybe go Google it. But what it suddenly meant was that there was no longer a one-for-one match between one Tether token and $1 being in Tether's bank account. And Tether avoided for quite some time being audited. And they're quite reluctant on this, which again, for Georgina's point, starts raising alarm bells. And then Tether came out with an announcement of, yeah, it's a one-for-one match between Tether and US dollars, all equivalent reserves on our balance sheet. And you kind
What does that mean?
Well, exactly.
What does that mean?
Exactly. And so what they then said was they extended that and said that that may include reserves, which is creditors. So it sounds like what they're now saying is that if they did have a bank account with $100 in it and had 100 Tether, they may have subsequently loaned $30 out to somebody, and they then using that loan obligation as the equivalent collateralization or matching, which actually is bizarre. That's actually okay until it goes wrong.
Well, until one of the people who's borrowed the money, the loan, doesn't pay it.
Exactly right. And it was so funny that the blog that got shared earlier made the comparison to The Big Short. And if anyone hasn't seen The Big Short, it's the most absolutely brilliant factual stroke fictional program about the 2008-2009 financial crash, and how it was that certain people managed to work out that the whole housing scheme, particularly around America, was about to collapse. And it was summed up when one of the people who had the suspicion went down to Florida, I think it was, and ended up speaking to a stripper there who had a loan on a property. And this guy said, well, what happens if the interest rate goes up on the loan on the property? And she said, oh, well, that's fine, because I'll just get some more loans. And he said, what do you mean more loans? And she said, yeah, I've got 5 properties. And I've got mortgages on all of them. And if the rates go up, I've been told by my advisor, I can just get more loans. And it was this whole thing that there was a feeling of the faith people had in the system was about to be pulled away. And same with Tether, exactly as John says, that if they're loaning money out or crypto out or dollars out or whatever, and there's a default on there, unless that's fully reinsured, then that then puts the Tether market at risk. And Tether is a very, very big player in the crypto space in terms of exchanges and that kind of thing. So if you haven't read it, do read the blog that got shared out on the WhatsApp group. It's a good one.
I don't like it.
Sorry, go on.
Sorry, no, I don't like it because I opened an account with Bittrex and I started trading a little bit. And that was, I have to be honest, I jumped on the wagon without I read the white paper about Cardano. And I exchanged a couple of Bitcoin. And all of a sudden, I see an amount in USDT. I'm like, what is USDT Tether? I said, I don't want that. Don't force me into it, because now I've got maybe 90 cents or a pound or so in there. And then you have a minimum exchange. And I said, don't force it on me. I don't use it. And when I read this as well, one Tether is supposed to be $1. I'm like, if you've got $1 already, why invent something new? And I thought maybe somebody had this glorious idea of how can I money launder in the crypto space. That was my thinking. And I absolutely don't like it that it's enforced.
And it is one of those things, again, you're right about people struggle at times to understand, well, if you've got the US dollar for trading, why do you need Tether as well? The reason can be simply because if you're trading in dollars, that immediately puts you under the spotlight of the US government. So there are various US regulators who, as soon as you trade in dollars, that gives them the legal right to get involved in your business. Even if you're a British shopkeeper and you accept dollar bills, that then suddenly puts you under the risk of the US government flying someone out to the UK to investigate you. It's kind of quite profound. So if you're trading in Tether, because that's not US dollars, that might reduce that exposure in some way on a legal point of view. And that can be very useful. You know, and I say that not as an illegal thing, but I used to work for an oil trading company, and we had branches and offices and all sorts around the world. And the role of our compliance officer was to work out what route our trades needed to take in order to be legally compliant. You know, because if we did a straight line trade, you know, as it was at the time between the US and Cuba, that was illegal. Whereas if we routed it from the US to Amsterdam, from Amsterdam to Switzerland, Switzerland to Estonia, Estonia to Cuba, with no direct line between them, that was legal.
Yes.
Go ahead.
I was going to say, I guess also that as soon as you involve dollar or pound or euro, a fiat currency, you're then into, or the exchange or the platform that you use to do the switching with that fiat currency, you're then into the KYC, the AML, and so, some exchanges, I don't know what the term is, this unbanked almost, they don't have a fiat on-ramp.
So this is very interesting, because the regulators are looking at how they regulate the crypto space. And the first tranche of regulation was about ensuring that anyone dealing with crypto on-ramps or off-ramps, so, you know, your bank accounts where you pay into Binance using your bank account or wherever, that they made sure that the banks providing the on-ramps and the off-ramps did loads of KYC, so know your customer, anti-money laundering, CTF, which is counter-terrorism fraud, source of funds, and there was something else as well. But so there was a whole load of things. And this is why a lot of banks in the UK in particular will not have anything to do with crypto, because it's just too much aggro, to be honest, for them to go through the whole checks. And it's not actually a big enough market. So this is where I've had a challenge working with some startups who are crypto startups who are totally legitimate. They're trying to do a legitimate business opportunity in some way. They're trying to change the world. That's great. But we had to necessarily set up a UK pound bank account with a link to a Liechtenstein account, which then links into an Estonian account, which then links into a whatever account. And when you draw that out, you know, if you're an innocent bystander, you'd say that looks like money laundering to me. But actually, it's that we were simply trying to work out a channel that maintained complete legality. But in order to do it, you had to go through so many hoops. It looked downright dubious. So
it's akin to the offshore financing, because I don't know whether you anybody read the article that came out in, I can't remember which national broadsheet it was, but it was about a local town that was taking exception to, you know, Costa and Starbucks and all these big companies channeling money from the UK into offshore accounts and getting away with not paying the UK tax. And you've got to, you know, the local small businesses, you know, they were turning over, you know, a decent amount of money for a small local business, but their tax bill was massive by comparison to these big corporate organizations. And so they went into investigating how these big corporate organizations did it, and they actually made the town itself a tax haven. And they clubbed together to actually set up the same routes to be able to get money offshore and to it was to avoid tax rather than evade it, to prove a point, not because they wanted to not pay tax. They definitely wanted to pay their way, but they did it just to prove a point. And it sounds like to me that the crypto businesses, that if they have a red flag raised against them because of the industry they're in, it looks like they're using the same channels, because Amsterdam was definitely the biggest There's massive, massive amounts of money that go through Amsterdam purely as a means of an exchange from one country to another to be able to get round these legal issues.
Yeah,
And,
I mean,
and
that's why
it's money laundering in a positive way. It's not, you know, for terrorism or anything like that. But essentially, Amsterdam is a great big washing house for this money going in and out.
And this is the kind of frustrating thing that you get these challenges in what I describe as the real world, so the non-crypto world, exactly the same. But also there's so much dodgy dealing going on there, because a lot of stuff in Amsterdam, from some of the stuff I know, is actually that they're using it to buy diamonds, then they're using the diamonds to wholesale, then you sell the diamonds, and that way you've effectively cleaned out, you've cleaned the money. So you have actually money laundered it for some criminal activity. Not that I want to just point out for everyone, I don't offer financial, legal, taxation, or criminal advice. But there is a really good paper that I think it's PwC wrote it last year, on different money laundering tactics. And actually that Bitcoin is about number 30. There are far better ways of laundering money than using cryptocurrencies. And that was what was really frustrating the other day. Christine Lagarde, who is the European Central Bank chairman now, I think she is, was commenting about, oh, Bitcoin and crypto, oh, there's some funny stuff going on with that. It's like, well, yeah, there probably is, but not as funny as what's going on with the US dollar.
Yeah, so she seems to be making a case for greater regulation in Europe.
Yeah, well, which ties in that European Central Bank are writing a paper at the moment on cryptocurrencies, and the European Union are trying to come up with EU-wide regulation and legislation. Some of it ties in with what's called FATF, which is the Financial Action Task Force. So this is a global thing around money laundering and that kind of thing. And also there is a thing called MiCA, which is the markets in crypto assets. So the EU's writing a paper on that at the moment, where they're looking to try and regulate the whole crypto space. The good thing about that is that the EU does not move quickly. And trying to get 27 countries, is it now, to reach agreement on something is actually quite useful for the UK, because the UK, now it's not part of that, could actually come up with some quite innovative regulation that's a bit more flexible, shall we say, and it's a bit more appropriate. So it might be a good thing of Brexit that we might become a crypto haven in some way.
And the UK has already been quite positive about its definition of what a cryptocurrency is, that it's not a security, it's not whatever, it's actually got quite positive regulations already, actually taking quite a positive stance.
You're right. I've quite liked the approach the FCA has taken until the 6th of January. And the 6th of January was when a document called PS19, which is the policy statement on crypto assets, kicked in. And that has now made it illegal in the UK or at all for you to sell to retail people, so people like ourselves, crypto derivatives in any way. So this is contracts for difference, electronic traded funds. So this is what has sent the likes of eToro into a bit of a spin in parts, and Hargreaves Lansdown. I think there's a couple of people who are members of this group who had ISAs or something with Hargreaves Lansdown, which effectively been almost frozen now because they're now not allowed to trade in them since the 6th of January.
eToro is fine if you're not leveraging. So,
yeah.
so I use eToro a lot, although they have a limited number of coins. And as long as you're just doing a one-for-one purchase, then you actually own the asset, and there's no leverage, and it isn't actually a contract for difference as such.
So John, that's a good one. It's nice to actually speak to someone who uses eToro. Do you actually hold the private keys?
No.
So you don't own it?
It's a pooled asset, but the asset is actually bought. So it's not a contract for difference where you're borrowing money in effect off the exchange to purchase more than you actually put in.
Okay.
So on a one-for-one basis, the asset is actually purchased.
Okay.
But no,
So,
you don't have an individual wallet.
So this is where it's worth sharing for anyone who isn't familiar with this as an approach, that eToro, and there's a few others who do this, Revolut do a similar thing as well, whereby when you buy cryptocurrency through the market, you don't actually buy the physical cryptocurrency, you buy the legal ownership of the equivalent value of the cryptocurrency. And that might sound unimportant, but what it means is that if you have your own wallet where you've got your Ethereum and whatever else in or whatever, and you say to eToro, oh, can you send me the keys so I can stick this on my wallet? They can't do it because they hold their own pool. They say it's highly secured, it's using their proprietary lock-in mechanism, whatever. But if eToro went under tomorrow, then you've lost your crypto because you've got no comeback on it. So just something to be aware of with that.
It kind of comes down to that. Who do you trust more? Do you trust yourself to look after your keys properly, unlike the guy in Cardiff and Stephen Thomas in America, or do you trust the exchange to run its business properly?
Yep. And that's exactly how I describe it to people. It's all about a risk balance between the effort and the risk of you holding your keys for yourself and you losing your wallet or forgetting your password or you getting hacked or you being phished. So I don't know if any of you are familiar with the term phishing, but there's one of the guys in our group who was very, very diligent in all his crypto. This happened a few years ago now, and he got an email one day from whoever he was trading with, either Binance or Coinbase or whatever, and he made the classic mistake that when he got the email, he clicked on the link. It all looked like it was totally legitimate, but actually it wasn't. It was a spoof site that then captured his username, password, all this kind of thing. And before he realized what happened, they then used that to log into another computer and siphon all of his Bitcoin out. So these things can happen. So as John says, it is a challenge between you being responsible for your own stuff or delegating the responsibility for either an exchange to take custody of it or a bank even to take custody of it these days.
Okay, could I ask a question with regards to what will become quite important for me, trading? Let's say I put Bitcoin in, I started reading about Ethereum, Cardano. I quite like the idea of Charles Hoskinson being a pretty cool head, so it seems like a stable project. Now, what would happen for me now if, let's say, I buy whatever, £500 worth of Bitcoin, I transfer it to, or I exchange it against ADA, then I put it in my wallet, then I start staking. Then let's say 7 months later, I'll take it out and I sell it again. How on earth? I think somebody sent a link with Coinily. I don't know who that was, but how can I, as a small trader, and I'm really just a small trader, I'm not trading by super regularly, how can I then figure out what I need to declare and what happens with the staking as well? Because this is something where I started reading, but I can't get my head around it at the moment.
So probably worth splitting that into two questions, because the phrase, what do I need to declare, I assume you mean for taxation purposes.
Yes.
Okay, so this is where it's really funny, because Chris started off this conversation, if I remember correctly, with, I'm new to this, and he's already talking about staking, Cardano, Ethereum, blah, blah, blah.
Well, let's put it this way. I know a little, but on a horizontal level. So, I mean, I started watching YouTube videos, and what's really bad, and I figured this when I was in the time of Cryptonic and everything, I was like, hang on, I don't like this, but I started watching box mining, and I think that guy is really doing a great job. Okay. And I started reading about Cardano, Charles Hoskinson, and I started leaning, check what team is involved. Does it really make sense?
Yeah.
So yeah, I opened trading accounts. Okay, I'm still new, but I've got my hands in many pots, Gary.
a wide portfolio of diversity there. That's good. All right, the quick comment I have is I've met Charles Cardano, Charles Hoskinson a couple of times actually, and he's actually a human being. He actually has a sense of humor. He's pretty switched on. He's got a degree of sarcasm, which I think is always useful. And so I like what he's done. He's been to one of the events I've hosted, I think, where he's talked about stuff. He's a bright guy, and he's sensible, he's intelligent. So I agree on a project basis, that's really good. I've met some of the Cardano Foundation people who are now not part of that. And because we're recording this, I won't go into that, but that was a slightly different experience. But these days, I think they're great, a good team, as you say, and Charles is leading the fray on that, which is good. But going back to your point about what you need to declare, I did say I don't offer financial, legal, taxation and criminal advice, I think earlier on.
Sure.
But the thing on the taxation piece, it's well worthwhile checking HMRC's guidance. They did publish it in December 2019. I think someone shared a really good link to a law firm who offered an interpretation of it as well, or an accountancy firm. But from what I recall, they expect you with any trades to effectively do a mark-to-market against the British pound or the dollar or whatever at the point of the transfer. John?
Okay.
Yeah, and every time you sell a coin, whether you sell it to realize profits in pounds or dollars, or whether you do a crypto-to-crypto swap using Bitcoin to buy Cardano, for instance, that's a taxable event and therefore potentially subject to capital gains as a tax on loss.
Yeah.
So just because you change one crypto directly for another crypto in the UK, it's a capital gains taxable event.
Yeah. And I know people, what they're doing is that there are various exchanges, like I think Coinbase certainly does it, where you can download your entire trading history to a flat file. And you can use that, first of all, to calculate everything, and you can do mark-to-market calculations on what the price of Bitcoin was and what Cardano was in GBP on a particular date and that kind of thing. You can use that for your tax calculations, and they also include a copy of that file when they submit their tax return. Now, I think what that's going to do is two things. One is it's going to show that you're being a credible, honest person. And the other thing is that it's going to overwhelm HMRC, who are going to eventually realize they're just trying to deal with too much data for something that's not actually worth the efforts. And I do wonder if they'll eventually come to the conclusion that you pay tax at the point at which it's converted back to a fiat currency. But that's an opinion. That's not based on any fact or any knowledge. Or
I guess the worry for the HMRC or any tax regulator, if that was the case, is that if you then purchase something using cryptocurrency, say you purchase a house using Bitcoin, then you've avoided tax completely.
Yeah.
If they were only taxing once it becomes a fiat.
Chris, could you repeat that? I missed that. Chris?
Yeah, sorry. What
sorry, not Chris. Jonathan, sorry. I missed that point. Sorry, Jonathan.
So Gary was suggesting that because HMRC could possibly become overwhelmed with the amount of data about people's transactions, that they may consider moving to only being interested in it once you convert crypto to fiat, to pound or dollar or whatever, when it turns into real money that you can buy things with. But as crypto becomes more generally adopted and you can actually buy things with crypto, such as you can actually buy property or a car or whatever, then if you use Bitcoin to buy a house directly, then you haven't converted it into pounds. Therefore, in that scenario, you wouldn't be subject to any tax at all.
Right.
That's a good point, actually, John. And I think it's going to be that this stuff's going to evolve over time.
Yeah, absolutely.
Which is why I do say watch what HMRC.
Yeah, I think there's going to be a small transaction limit, so that for you know, if you're buying a coffee in Starbucks with Bitcoin, that's a taxable event. Yeah, it's such a minimal amount, a couple of pounds. Should you really have to, in effect, declare it in your annual tax return that you've spent 0.00019 of a Bitcoin on a Starbucks coffee?
And that's why you can see that there's so much uncertainty and lack of clarity on this. Because if I use my Starbucks loyalty points, that's not a taxable event. However, what happens if Starbucks decides to convert their loyalty points to be crypto tokens? So I was doing a piece of work with a company a year or so ago called Simple Token. And Simple Token basically allow you, if you want a loyalty token, that they can spin it up for you. And so they were looking at, there's a brewery in the UK that's interested, where instead of you getting loyalty points for every time you go to the pub or whatever, if anyone remembers those days, I know they don't exist anymore, but you would get effectively loyalty tokens that you could then use for future things. So it's all over the place. And this is where I do think that the sheer volume of activity means at some point the tax authorities will go, you know what, this is so much aggro, we'll just instigate some simple rules, and we'll go on a principle basis of trying to get the people who really owe us money.
I don't think that will happen, because because they're already saying at the when I read the HMRC guidelines just before Christmas, they're already saying that if you're actively trading, that then becomes subject to income tax. So the point is how many trades do you have to do in a year to be classed as being a trader, and that is then taxed differently.
That one's easy, because I know the answer to that one.
Yeah.
It's where your primary source of income is through trading.
Right.
So if you've got a side hustle where you're running an events management company and you're also trading crypto, but it's the crypto trading that generates more than 50% of the revenue, then they consider that to be a definition of a trader.
I don't think that's going to stick either, because there are several people who have, they run several businesses. They don't just get taxed on the main one, because a small amount of activity may be generating, significant amounts of money. It all has to be put in to work out what your allowances are.
Yeah. So but that's the exact thing. This is where, if this is an important question to you, it's probably worth speaking to a tax accountant. It is the starting thing, because they'll know more. But the simple principle that HMRC did say was, if your primary source of income is from crypto trading, then it's there. So because you got the other thing with crypto mining as well. I know a couple of people have mentioned on here about crypto mining. That can also be a taxable event in some way, depending upon what you're doing and how you're doing it. And in fact, even if you benefit from airdrops, where you get free crypto, free crypto through airdrops can be a taxable event, which doesn't make them free.
No, it doesn't. But also, if you lose your crypto because the platform has got hacked, because it's in your name, it's still a taxable entity, regardless of whether you got it.
Again, they have written guidance on that.
Yeah, no, that's where I got it from. That's because I read through it. Yeah. And like you, Gary, it's like I'm definitely not an expert. This is a personal take, as as being somebody who's been self-employed for 30+ years. I'm pulling out from it my understanding, and they are, bottom line is they are a million miles away from having resolved it. They are a lot better than when they first tackled it, because mining was the first thing that they did tackle. They had nothing about trading or actually owning crypto. And if you earned your income from mining, that was treated as a taxable based on the income tax.
Yep.
I think
there is going to be evolution on it. Sorry, John?
Yeah, I was just going to say, I think another factor will be that some countries already are seeing crypto as a real opportunity for them to be a leader in terms of attracting crypto and blockchain businesses, and are creating a taxation system, if you like, to encourage and attract those types of businesses and those kind of people with big amounts of Bitcoin or whatever. And Portugal, as far as I understand it, for instance, crypto is not subject to income or capital gains tax.
That's correct, which is why I know several people have moved to Portugal for that reason.
Yeah. So even Portugal's a member of the EU, I think, is it?
Mm-hmm.
So even within the single market, you've got countries that are quite prepared to do their own thing because they see it as a big opportunity.
Yeah. So this is one of the crazy things about the EU. Even with fiscal harmony and using the same currency, they're still allowed to operate their own tax rules, which I've always thought is a little bit weird. Because you can't control currency if you've got different tax rules everywhere. But yeah, you're right. So Portugal is very attractive at the moment. Belarus was trying to do a lot of stuff for companies in particular. So if you register in Minsk, there's a particular business park now, you can register to be tax-free there and operate as a business from there. There are other countries around Europe that are very tax favorable. I think the regulators, the tax authorities and everyone is beginning to realize that they can actually make themselves quite attractive to people to move to, or unattractive, depending upon what they want to do. And so the HM Treasury, they've currently got a discussion paper out that they're asking for feedback and comments on, which is around stable coins and other crypto assets. And that's asking a bunch of questions about how much regulation should we have, and taxation there, because they're beginning to twig if we put appropriate regulation in place so people don't get abused and stuff stolen there, but it's not overbearing, it actually makes the UK quite attractive.
And I seem to remember a couple of other countries, and I haven't really done a lot of research in crypto for a year or 18 months, but Malta came up quite a lot. Cyprus, I think they were making themselves quite attractive to trading and mining. I'm not sure if that's still the case.
So as I describe as the islands, so in particular at the Isle of Man, I was speaking to some of the regulators a few days ago, Gibraltar, with the Gibraltar Stock Exchange and GBX, they've created regulations. Malta took the lead. They've got what's called MFSA, the Malta Financial Services Authority. They've written crypto regulations. And I met Peter, I've forgotten his surname now, who is the crypto regulator in Malta, who was previously Malta's gambling regulator. And so what they've effectively done is they've taken a load of gambling regulation and they've applied crypto to it. But yeah, the islands are BVI, British Virgin Islands, very innovative, and they again, I think, are a tax-free authority. And I think BVI may possibly be one of the first countries to launch its own cryptocurrency, which would be interesting.
I think America is going to be interesting to watch, because have you seen that Biden has appointed head of SEC, somebody who was in charge of blockchain development at MIT.
Yep.
So I think that that's a very interesting appointment, because they're obviously taking it seriously.
I agree, and I think that the US government's had a real wake-up call. You can see how the various regulators were aware of what was going on anyway, with the SEC, CFTC, and all the state regulators. Because that's interesting again. Some states, such as Arizona, you can now pay your taxes in cryptocurrency. And I always think at the point at which you can pay your taxes in crypto, that's a real kind of step shift. But it was funny when Facebook and Libra was announced initially, to see the ripples going on. That initially, Facebook announced, okay, we're working with, I think it was 18 or 23 companies, we're going to launch this cryptocurrency. And then it went silent for about 2 weeks. And then all the retail banks went, hang on, that means there's going to be 2 billion customers with this new bank who weren't regulated, who are now playing banking services. And they got very upset indeed. They spoke to, I think it was Congress, and they said, hang on. And then about 2 weeks later, the central banks suddenly went, hang on, there's a new world world currency about to appear, and it's not the US dollar.
Yeah.
So this is where I think Congress wrote a letter to Facebook to say, we're not sure what you're doing, but can you please stop for a while?
I think Libra was a big wake-up call in the US.
Yep.
I think it made US government and, as you say, the US banking industry suddenly start to think, hold on a moment, if you've got a company like Facebook taking cryptocurrency seriously enough that they're actually thinking of launching a product. And secondly, fintech companies have not traditionally really been involved in banking. And suddenly you've got a fintech company, a huge one. It was, well, if Facebook are interested in basically getting involved in money, then what about Google? What about Amazon? What about, a number of others? And it's that fintech movement, technology companies, if you like, moving into the financial world that really has made them sort of wake up and think, this is serious.
Yeah, and I think it's interesting as well, you look at what's happened since, is that several members of the original Libra consortia have now left. So I think most of the payments providers like MasterCard and that are no longer members. I think there's still one payment provider who still is. If you look at the website, the Facebook presence has almost disappeared. So it's almost as though they're going through a rebranding exercise of, oh, forget Facebook calling, that's gone away now. Can we talk about DM? DM's this new great thing and blah, 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 and they'll do it that way. But yeah, I think you're right. The governments have suddenly woken up. And this is where it's interesting as well, that the governments are now looking at how they can do stuff. So the Bank of England did a paper around crypto assets and cryptocurrencies, and various other governments are doing research around central bank digital currency. So in Italy, they did a pilot last year with 100 banks, where they've now got effectively a central bank clearing function that was crypto-based, which was quite interesting. And in the Middle East, the Gulf states, the Saudi Arabian initiative with several of the Gulf states around what was called Project ABBA. And Georgina, you'll know in Wales, ABBA is river, I think correctly. Whereas in Farsi, I think ABBA means boundary or border or something. And so that they were doing it for inter-country settlements between central banks with Project ABBA, and they released some interesting stuff on what they found there as well. So yeah, even the central banks are looking at crypto as well.
But isn't there a petition going around by some financial advisor called Neil trying to ban cryptocurrency? I can't remember his surname, but
yeah,
I've read an article somewhere that he's trying to ban it in the UK.
I think I saw the petition when it had 120 signatures to it. And normally a petition that goes to Parliament, it has to hit a threshold, which I think is 100,000 for it to be considered for discussion in Parliament. So that's all House Parliament petitions are. They're simply you're petitioning Parliament to say, here's something you should talk about. And yeah, so he's launched a petition to ban crypto. It's like, yeah.
Who was it? Sorry, I missed. Who did you say it was that had launched it?
I think his name is Neil something. I can't remember his surname. Neil.
He's an accountant, I think. He's just a normal person.
Okay.
It just sounds like an old traditional financial advisor who's not really interested in, or perhaps even is worried about new types of investment.
Yeah.
And also it's good publicity for his business, isn't it?
There is that.
Yeah. Sorry, I know we're running out of time. I just had two questions. Just tracking back to Gary, your comment about DEM and the composition of international currencies in the basket. Do we know what percentages are allocated to euros or USD? Not at this point. Okay.
No, not at this stage. All they've said that I think they've produced another paper where they've said it will be a basket of fiat currencies,
okay,
but they've not gone into the details as yet. So I think what they're doing, I've always said that Facebook Libra was going to be the biggest crypto project to never happen, and I think in some ways it may be the same with DM, that they're using it to sound ideas out. It may actually never happen, but it allows them to say things like, oh, this is going to include the euro, the dollar, the pound, to see what the response is from HM Treasury, from the EU, and from the US government. So what they say they're going to do and what they do, who knows?
Okay. And the second question was related back to the discussion with Jonathan in terms of, you know, eToro, was it? So I use yield-bearing platforms like BlockFi or Celsius and get paid in kind. And is that the same thing then? So if I get paid in yield, in kind, it's not the actual cryptocurrency I'm getting. Is it just the legal value of that currency at that point in time that I'm getting paid as interest? Does that make sense?
No, eToro is a stock trading platform. You can buy traditional stocks, Apple, Amazon, whatever. You can buy currencies, US dollar. You can buy barrels of oil in effect, or invest in barrels of oil. So it's a standard trading platform, but they use contracts for difference as their method of you investing in whatever it is, whether it's a stock or a cryptocurrency or whatever. The difference is with cryptocurrencies that you don't own you don't have an individual wallet that you can access. It's a pooled wallet, but as long as you don't try to leverage your position with cryptocurrencies, then in effect eToro buy 1 Bitcoin for each Bitcoin that you buy, or 1 XRP for each XRP that you buy. But once you hold it, it goes up in price or down in price, just like any other cryptocurrency.
Okay.
You can do staking on there as well, but they have a very small range of cryptocurrencies, only about 7 or 8. But that includes Bitcoin, Ethereum, Cardano, I can't think what else. But so they're very small range. But then it's a platform that does give you access to every other stock that you can think of, traditional assets, whatever.
Okay. Thank you.
Nikita, probably the best thing to say is go away and find out. And when you have the answer, you can tell us some more time.
And it's a very easy dashboard to use. That's the other thing I'd say about it, compared to some crypto exchanges where it looks like an absolute nightmare looking at it.
Okay, guys and gals, I'm conscious of the time. Amazing how fast an hour runs by when you're talking about really interesting stuff. So I was going to close this off for today and say, thank you everyone for coming along. Hope you've enjoyed it. Do share and make comments on the WhatsApp group, or if you don't like WhatsApp, we've got the Signal channel or the Telegram group as well. I did used to run these weekly on a Sunday evening, and they kind of faded away after a few months. I think everyone got zoomed out. But if you want to, I can kick these off on a regular basis again. If you want that, again, just stick a note in the WhatsApp group. Any other thoughts? This is a group for all of us to learn from each other, to be honest. So hope you found that useful today, and have a good day.
Thank you, guys.
Thank you, everyone.
Nice meeting you all.
Bye-bye.
Bye for now. Bye-bye.